You are watching Darasa Online.
Welcome to Darasa Online. My name is Victor Francis, your accountants teacher.
You are watching Darasa Online.
Today, we are continuing with our lessons on accountants. In the previous lesson, it was on correction of accounting errors, where we saw how to identify errors and how to correct those errors. And we saw the classification of accounting errors, that accounting errors are classified into two broad categories: errors that are not revealed by true balance and errors that are revealed by true balance. As for today, our lesson today will be on correction of accounting errors, but basically we are going to look on effect of errors on true balance and net profit, and also on statement of financial position. Normally, when errors are discovered after the true balance being extracted, so when you correct the errors, then you need to post those errors from the journal to ledger. Then from ledgers, you redraft a corrected true balance. But in the other case, when errors are discovered after the financial statement has been prepared, that means the statement of profit or loss account, the statement of profit or loss, and the statement of financial position, if they are already being prepared, so there is no need of going through all those procedures, either by correcting through journal, then you post to the ledger, then from ledger to true balance you redraft the income statement and the statement of financial position. No, rather, instead of going all those procedures, after correcting through journals, so you only needed to prepare a statement of corrected net profit, and then finally you prepare a statement of financial position, including those corrections. So far, our today's lesson will have a comprehensive question that will go on all those parts on which will be required to rectify the errors through journal. Then we are going to eliminate the suspense, as well as we are going to see how we can prepare the statement of corrected net profit and the corrected statement of financial position. We are receiving your comments. We are receiving your questions. Of course, keep on texting us, keep on emailing us through our email. For any technical issues, we are going to assist you. Keep on revising and do more questions as you can to make yourself competent in problem solving in accounting. Let us now go direct to our question to see what we can do for today.
You are watching Darasa Online.
Our question reads: the following balance sheet has been prepared by an accountant trainee. It is for Vishere Limited statement of financial position at 31st December 2019. You are given the fixed assets, building at cost, 50,000, fixtures, 1,000, motor vehicle, 5,500, drawings, 2,400, makes a total of 58,900. Current assets, provision for bad debts, it is 160. Provision for depreciation. We have buildings, 10,000. Provision for depreciation on fixtures, 300. And provision for depreciation on motor vehicle, 1,500. Stocks were 4,166. And debtors were 3,166 again. So making a total of 19,292. So if you add up the current assets with fixed assets, you get a total of 78,192. It was financed by capital, 65,900. Net profit of 2,973. There were a loan from Harry, its maturity in 2023, amounting to 3,500, and creditors were amounting to 1,206. Bank overdraft, it was 1,425. Cash balance was 600. There were accrued expenses of 180, making a total of liability side to be 784. So the question continuing telling us that after a thorough investigation, the following issues were discovered. So in Roman 1, all other accounts balances except those mentioned below in Part 2 to Part 5 were correctly extracted from the ledger accounts. Roman 2, depreciation expenses for the year were not provided for. So the business usually makes a provision for depreciation at a rate of 10% on cost for all fixed assets. And provision for bad debts should be reduced to 100 shillings. Then Roman 4, the cash balance was wrongly extracted from the cash book. The correct amount is TZS 5,280. Roman 5, also the capital was wrongly extracted from the ledger accounts, the correct figure being TZS 50,268. Using the information provided, prepares Part A, journal entries to correct the errors, statement of corrected net profit, and corrected statement of financial position. This is our question today. So far, if you go through the question, there are a number of issues, first of all, to consider. So we are required to prepare a journal to correct the error, also to prepare a statement of corrected net profit, and also to correct a statement of financial position. Remember that in the question, we are told that this statement of financial position was extracted by the accountant trainee. So far, if you go through those items, you find that they were mixed. So we cannot rely on the difference given that if you take the asset side, let us compute. The asset side, that is 78,192 minus the liability 75,784. The difference in our question, it is 2,408. This is not the real difference in books. First of all, before we proceed, we need to redraft this statement of financial position, because in Roman 1, we are told that all other accounts balances except those mentioned in Roman 2 to Roman 5 were correctly extracted from the ledger. If only the item in Roman 2 to Roman 5 have wrong or containing errors, so far we need to redraft this statement of financial position to set out the actual difference in books, because these figures are correctly extracted, because these figures are coming from the reg accounts. Then after redrafting, we are going to see the actual difference, and that actual difference we are going to place it in the suspense. Then after correcting those errors, then we'll prepare a statement of corrected net profit, and finally the statement of statement of financial position, that including those corrections. Let us redraft this statement of financial position. That was 31st December. It was 2019. So the amount will be in TZS. This is the shares core Limited's statement of financial position is at that date. So we start with non-current assets. Non-current assets, in other words, fixed assets. We have building at cost. Building at cost was 50,000. So less provision for depreciation. Provision for depreciation for a building was 10,000, making a total of 40. We have fixtures. Fixtures at cost were 1,000, less provision for depreciation. That is, provision for depreciation for fixtures was 300. So if you less, you get 700. Well, we have motor vehicle. The motor vehicle was 5,500. If you less provision for depreciation for motor vehicle was 1,500. You get 4,000. Then we go for the next item was drawing. This drawing is not fixed asset. What else in fixed assets? Fixed assets are over. We have bidding at cost, fixtures, motor vehicle, with its relevant provisions, Then we go for stock. That is current asset. With the current assets, we have stock. Stocks, we are told that stocks were 4,166. Then we have debtors. Debtors were amounting to 3,166. But we have provision. Yes, provision for bad debts, 160. So we reduce from debtors. If you reduce here, you get 3,006. Then after that, so we have cash, capital, net profit, loan, creditors, bank overdraft. We have cash balance. Yes, cash balance 600. It was 600. Then the side of assets, almost we have shown all the item. We need to have the balance here. So we come to the side of liabilities. Where we put here equity, financed by, we have capital. The capital is 65,900. Then we have net profit. The net profit was 2,973. But we are told that there were also drawings, I think. Yes, drawings. Drawings reduces capital, 2,400. So you are going to deduct this. How much do we get? So let us compute here. 65,900 plus 2,973 less 2,400. We get 66,473. Then we go for yes, long-term liabilities or none. We call it non-current liabilities. We have loan from, it was loan from from Harry. It was how much? Loan from Harry, it is, yes, 3,500. Then we have current liability. With current liabilities, we have creditor, I think. Yes, creditors. Creditors is 1,206. That was creditor. We have bank overdraft. The bank overdraft was 1,425. Then we have accrued expenses. With accrued expenses was 180. Then item left, I think we have exhausted them. Yes, the net profit. Well, we have exhausted. Yeah. Then we check the total. It is 1,206 plus 1,425 plus 180. We get 2,811. So if you get the total here, 3,500, 66, 473. Have a total of 72, 784. And here in the asset side, we have 40,000 plus 700 plus 4,000 plus 4,166 plus 3,006 plus 600. Have a total of 52, 472. So our balance sheet is not balancing. Now you can trace the difference. Take the difference where the liability side exceeds the asset side by how much? Uh, 784. Well, so the difference is 20,312. Well, this is the actual difference, and this is supposed to be placed into suspense account. Let us now open our suspense account.
You are watching Darasa Online.
So the balance, as we say that the liability exceeded the asset side by 20,312, then the difference in books will be on debit side. That is the difference. It is 20,000. Well, this is the difference. So we need to go back again to our question to see how we can now come to the correction of these errors. We are told that in Roman 1, all other account balances except those mentioned in Roman 2 to 5 we are correct to extract it from the ledger accounts. Then Roman 2, we are told that depreciation expenses for the year we are not provided for. So if the depreciation expenses we are not provided, so we need again to open up journal entries to correct these errors, that is in Roman 2 to Roman 5. So we need again to prepare now journal entries. Let us go for a short break. Then as we come back, we will prepare our journal. Then we'll prepare the statement of corrected net profit. And finally, we will finish up our question by preparing a corrected statement of financial.
You are watching Darasa Online.
Welcome back again. So from our question, we are required to prepare journal entries to correct the errors. So far, I read the first item, that was depreciation expenses for the year we are not provided for. So and basically, the business usually makes a provision for depreciation at the rate of 10% on cost for all fixed assets. Let us now open our journal entry to provide these depreciations. So the depreciation, we are told that it was 10% on each fixed asset. Our fixed assets, we have building at cost, which was 10,000, which was 50,000. 50,000, if you multiply by 10%, we get 5,000. That will be depreciation for building. We debit depreciation for building, that is 5,000. We credit provision for depreciation. Depreciation for building, that is 5,000. So remember to write the narration. The next fixed asset was fixtures. Fixtures, the cost price was 1,000. So the 10%, it will be 100. We debit depreciation for fixtures. That will be 100. And we credit provision for depreciation on fixtures, 100. So you put your narration. The third item is motor vehicles. It was 5,500. 10% for motor vehicle will be 550. We provide depreciation for motor vehicle. It will be 550. So provision for depreciation for motor vehicle, that is 550. So you put your narration. Think our fixed assets are over. We have building, fixtures, and motor vehicle. So we have provided for the depreciation. Then what next? We are told that provision for bad debts should be reduced to 100. That is Roman 3. So provision for bad debts given in our balance sheet or in the statement of financial position is 160, and it is supposed to be reduced to 100. So the balance remaining in the provision is supposed to be 100. So if it's supposed to be 100, then we are going to reduce by 60. So normally provision for bad debts has a credit balance. To reduce the provision, we debit the provision for depreciation, and then we credit P&L. So we are recovering. So we provided for, we expected to have more debtors that could end up being bad, but we expected that there will be a recovery from that provision. So that's why we debit provision, we credit profit or loss account. We debit provision for bad debts by 60. We credit profit or loss account as a recovery. As a gain from the expected provision. Then the next item, that is Roman 4, the cash balance was wrongly extracted from the cash book. If the cash balance was wrongly extracted, we are told that the actual balance or the correct entry is 5,280. So we need to check the difference. The balance that is given is only 600. If we take the difference, let us compute. We have the required balance is 5,280. Let me compute it. 5,280 less 600. So that means it was undercasted by 4,680. To correct this, we need to debit the cash account by 4,680, and we credit the provision. We credit the suspense account because it was wrongly extracted. So we debit cash account by the difference, that is 4,680. We credit suspense $4,680. So remember to write the narration. Because this error was originating only in one account, so then we carry forward this to suspense account by writing the corresponding account, that is cash account 4,680. Then we go to next item. The next item, that is Roman 5. Also, the capital was wrongly extracted from the ledger accounts. The correct figure is supposed to be 50,268. So the same as we did in the previous, we need again to adjust the capital. If the capital was wrongly extracted and the capital containing credit balance, so we need to check the difference to consider whether it was overstated or understated. If you go back to the balance sheet, we find that the capital was 65,900, but the balance that is supposed to be, it is only 50,268. This implies that it was overstated. So if you overstate the capital, in order to correct this, so we reduce by the difference. We are going to compute the difference, and then we are going to debit the capital with the difference and credit the suspense. Then you have corrected your error. Let us compute the difference. We have 65,900 less 50,268. So the difference is 16,632. So as I said, we said that it was overstated. If capital was overstated, we debit the capital to reduce with the difference, and we credit the suspense account. So we debit capital account. That is 15,000. Yes, 632. We credit to suspense. Meaning 15, 632. Then remember to write the narration. So transfer to suspense by writing the corresponding account, that is capital, 15, 6, 3, 2. So from our question, the items are over. We check whether our suspense is balancing. Here we have 20,312. If you add up the 15,633 plus 4,068, okay, so it is balancing. So we have already eliminated the suspense. So the first part of preparing journal entry is over. The second part was requiring us to prepare statement of corrected net profit. So far, if you have corrected properly your errors, I would like to show you the easiest way of preparing this statement of corrected net profit in a short period. This is a big problem again to most of students. You find that they are correcting properly the errors, but in drafting the net profit, the statement of corrected net profit, so they get it wrong. Why? Because either they go back to the question and confuse the question, typically confuse the question. So if you have corrected properly, so the easiest way is just to consider the item that affects the net profit by either increasing or reducing the balance. So we'll have only three major items. The item that will be clearing the suspense, to eliminate the suspense, and you have items that will be correct. I mean, the correction of it will go to ledger accounts, then it will have impact in the net profit. So we are going to adjust in the profit. And there will be items that need correction to the statement of financial position. So let us now prepare, and I will show you here the statement of corrected net profit. So far, in preparing of this statement of corrected net profit, we start with the profit shown in the books. Then we are going to adjust with the respective journal entries, because these containing correction of errors that caused the profit to be incorrect. So the profit shown in the balance sheet was 2,973. That is profit as per that was statement of financial position. That was what was the profit? Yes, 2,000. No, we put it here. 2,973. That was the reported profit. So we add with items that increases the net profit from our journal. That normally are credit entries. So if we consider from our journal the item that are likely to increase, you go direct to your journal. The first item is provision for depreciation. This item normally is transferred to the statement of financial position. For this particular case, does not affect our profit here. The next, the same. Even the third item, the same. The fourth item, 60. So P&L, automatically it affects our profit. So far, we take this. That was provision for bad debts. This, yeah, because it is only one item, we take it direct to this side. Because if you go to the next item, it was suspense. This was a correction entry to the suspense, the same as the last item. So here we have only the item that increases the net profit is only one item. That was reduction in the provision for bad debts. If you add up with this, we get 3. Here, 3, 0, 3. So we less with items. Reduces the profit. That will be debit items from our journal. So far, If we go to our journal, we have this depreciation for building. Depreciation is an expense, so we have to take it the same as depreciation for fixtures, depreciation for motor vehicle. So we take all those items. Depreciation for building, that was 5,000. Then depreciation for fixtures, that was 100. Then there were depreciation for motor vehicle, that was 500. The next item was provision for bad debts. These also should go to balance sheet to reduce the balance of debtors. Cash, this is a balance sheet item. Capital, balance sheet item. So this will be the last item. If you take the total here, you get 5,650. So if you less from our total here, 3033 less 650, we get a loss of 2,617. This is a loss. Should be put in the bracket. Basically, the previous balance sheet reported a profit, but finally, after redrafting and correcting the errors, we find that the profit, our profit, ending up being negative, that is a loss. That will be the loss as for the year, yes. Corrected net loss for the period. Then the next item now from our question, it will be now to correct the statement of financial position. Let us now go to statement of financial position. This is Vishere Company Limited is corrected statement of financial position as at, what was the year end, 31st December? (2019). So we have our non-current assets. So remember, from the correction or from the, remember from our journal, we made some provisions. So adjust. From our question, we have building at cost. Building at cost was 50,000. So let's provision for depreciation. So provision was 1,000 from, it was 10,000 plus that 5,000, we get 15. If you less, you get how much? Yes, it will be 35. We go for the next item. It was fixtures. Fixtures at cost was 1,000. Less provision for depreciation. So the accumulated depreciation for fixtures were 300 plus that in the provision 100, we get 400. If you deduct, you get 600. Then we have a motor vehicle. Our motor vehicle is 5,500. If you less provision for depreciation, that was from our motor vehicle, provision for depreciation was 1,500 plus 550. We get 2,050. If you less, we get 3,450. So we are finished with our non-current assets. We go to current assets. In our current assets, we have stock. In the stock, there were no correction. Stocks, we have how much? Stock, yes, 4,166. Then we have data. Data was amounting to 3,166 less provision for bad debts. So you put the balance that was supposed to be the 100 after correction. Then we get the balance 3,066. What next? We have cash balance. We are told that the cash balance should be now the 5. You put the actual balance 280. So I think we are exhausted with the item in the asset side. So we go to the other side, that is liability side. We have our equity. In our equity, we have capital. So the capital, you put the actual balance. That is supposed to be 50 after correction, 68. So we had the net loss. Net loss, if you remember, it was 2,617. 2, 1, yes, 2,617. That was a loss. And we had drawings. Our drawings is how much? Yes, it is 2,400. This also should be reduced from our capital. So let us get the net equity. 50, 268 less 2,617 less 2,400. We get 45, 251. Then we are told that we had long-term liability. We call it non-current liabilities. And this is a loan from, it was a loan from Harry. A loan from Harry was how much? Yes, it was 3,500. We put it direct here, 3,500. So we had no any other non-current assets. We go to current liabilities. With the current liabilities, we have creditors. There were no correction in our creditor. Our creditor balance is 1,206. We had bank overdraft. Our bank overdraft was 1,425. We have also accrued expenses. Accrued expenses 180. I think we are through also with the current liabilities. Let us have a total 1,206 plus 1,425 plus 1,8. We get a total of 2,811. So let us compute our total in the rabbit side. 3,500 plus 45, 251. We get here 51, 5, 62. And also we make our total here 3500 plus 600 plus 3,450 plus 4,166 plus 3,066 plus 5,280, making a total of 51,562. So our balance sheet, our statement of financial position has balanced. So far, this marks the end of our today's session. Remember that this is a revision topic. as we say that there will be an assignment on each. So we are going also to press a question that will help you to make more practice. And next session, we have a revision on branch accounting. So we have time to solve various questions in branch accounting. So far, keep on revising this topic because it is very important topic. As we have seen that you may find a written question or a problem solving question. So as we finalize, we're still inviting you to give your comments, keep on revising, keep on doing more questions. So you will establish more difficult questions in various books, but follow the steps that we have discussed or I have explained before. It will be easier for you to solve questions in this topic. Let us meet the next session. Thank you.